What's up, guys? Get started in a minute. How's everybody doing? How's the sound? Just give me a quick sound check. Sound is good? All right. Let's get it started. Okay. What's going on? What's going on? Got a lot of stuff going on here, so bear with me. Travis, BJJ, Apprentice, nice. And Beck, what's going on, buddy? Ting, Ash Proxima, Shoebill, Chaplin. All right, cool. So we are live on, I know the camera's there, but I'm going to be reading the chat. And until I'm working off a teleprompter, from time to time I will be addressing the camera. But otherwise I'll be keeping an eye on the chat. I want to get some chat interaction, and I have a habit of saying that we're going to do Q&As and AMAs and then going on really long tangents and never getting to the chat. So apologies for that. Yeah, we'll give another minute or two before we get into it. Hopefully everyone's doing well. Hopefully everyone had a good Thanksgiving and a good weekend. So apologies for changing the stream time. I did leave it up to vote. No beer, club soda. I don't even actually drink anymore. So going well, going well. And giveaway too, apparently. So I already did the giveaway. I already did the giveaway. I did the jiu-jitsu giveaway, and I did the what other giveaway did I recently do? The TradingView giveaway. So I already did that. So if you won, you got an alert on your comment under the Jiu-Jitsu Modern video or the last live stream where I announced the TradingView giveaway. So I picked the winners. They've been in contact with me. So, but yeah, actually announcement. I thought about extending this. So it is Cyber Monday. So on, excuse me, club soda. Couple of burps here. On Black Friday, I extended a sale, so 33% off of the stable. So that applies to any tier. So that applies to annuals, that applies to 1 month, whatever you want, whatever your heart desires. That was 33% off on Friday. So those went out pretty quickly. And I'm extending that today for Cyber Monday. So after tonight, when the clock strikes 12 a.m. Eastern time, so there's 6 hours and 50 minutes from now, that promotion will be done. But I am extending that to you guys right now. This video will be posted on YouTube after. It's going to be entirely recorded and transcribed. So there will be some time for you guys to... for those of you that are watching, take advantage of that. So anyhow, let's get into it. This is going to be, I'm going to try to keep these streams pretty casual. So we'll obviously talk about the market, my thoughts on where we are. Last stream was actually pretty damn spot on. So the idea last stream was to hold on to any long exposure, We'd be looking for higher, ultimately to sell higher if that was the case, if you're going to be taking the other side of the market. My advice to anyone is, at least in the beginning, like don't look at the market as just offering constant two-way activities. The amount of people that I see that are not profitable on the long side that are looking for things on the short side is staggering. So as I've said, I think that you shouldn't really be shorting a market. Sorry, something in my eye. You shouldn't be shorting a market until you are consistently profitable on the long side, especially in this market. In large caps, maybe not as much, but in a lot of the altcoins that like we're well aware that they're just going to bleed back down towards zero, almost monotonically. The danger in shorting them is the jump risk that something that's a low float, thin asset has. So you could be right about direction, but you could be completely wrong about path. So the idea was we'd be trading higher than 92, 93 would be a sticking point. And here we are right now, obviously considerably lower, but the trend hasn't changed. So we'll get into that after just going over some, I think, important touch points. I have some questions for you guys. And then we'll do an AMA, and hopefully this will all be wrapped up in around an hour. I don't want to take anyone's time on a Monday, even though, it's not like it's a Friday. But, okay, so I think what's interesting, and I saw this morning, if I shovel horse shit, can I get free access to the stables? No. So I think first things first, a couple things worth pointing out is this week is interesting from a data standpoint. My view is that most traders should probably ignore the macro. That's reality. Like most people should be focused on their system. They should be focused on price. Price is often the best indicator, right? The market is a really good truth teller, right? There's many times where it isn't right. The market is not always right, like people like to say. If it was always right, there'd be very limited trading opportunities to take advantage of. Obviously, there's plenty of inefficiencies, plenty of dislocations that you could trade. You could smooth out. But I think most people should be focused on price. That being said, we're in a very headline-driven environment. Like, if you're new to trading, congratulations. This is like one of the craziest times that I've ever experienced in markets, going on 20 years. It's very headline-driven. The current administration has their hands in the markets. Like, it's not even. There's no attempt to even there's no attempt to even cover it up, right? So, extremely headline-driven, right? The market is. Up 100 points, down 100 points the next couple of days, up 100 points, right? It is clearly trading very loose. And certain things are going to have more importance during, times like this where liquidity is a little bit, liquidity is kind of a coward. It's only there when you don't need it. So markets are trading thinner. We went through a period where the cuts were for December were, they were priced in and it was a near lock, and then they came off. I think it got all the way down to 30% if you looked at like the CME rate tool, and then back up to 50, and then back up to 80, and here we are now. And the only reason I'm saying all this is because I think most people should just be aware of prints, right? If you're long a position, if you're long, the index, if you're long BTC, and you're not aware of like what is on the road ahead, that can be dangerous, right? Especially if you're a short-term trader, and you're not aware that you're trading into NFP. Normally, the first Friday of the month, we would get NFP, right? Non-farm payrolls. And I think that would be really important given that next week is FOMC. And, we priced in the cut, obviously, again, but I think there's always room for curveballs. So this week, we don't have NFP, but you do have ADP non-farm payroll on Wednesday. So I think that the Wednesday ADP non-farm payroll, which is at 8:15, probably takes on more significance. It's like really it's the only significant event, right, that we have before FOMC that could really, that could shake the game board, right? Other than that, we have a lot to talk about. What does everyone, I'm curious to see the answers. What does everyone think caused the selling, right, in the overnight session? So we have two things that really stand out, right? I mean, the thing that stands out to me is that the market is clearly in a downtrend, right? It's clearly in a downtrend. It's objectively ascertainable no matter how you cut the market, whether you're a trend follower using moving averages, whether you're a structure guy, whether you're a flow guy, and you're just seeing that there's an overwhelming amount of selling. Only until recently did the spot market seem to get a little bit more involved on the long side. But there is, I think, some, people like to say that the nothing news-wise or catalyst-wise matters, which is actually, it's fucking complete nonsense, right? Because there's things that can, take the market by surprise at any given moment, right? This is what black swans are, right? Or in a way, black swan is something obviously that does take the market by surprise. But there could be really like insignificant, right? Somewhat innocuous catalysts that are breaking news, that are developments. And depending on how the market is already positioned, depending on what condition the market is in, they will be received one way or the other. Okay. So you can't say purists like to say that, none of these things matter, right? I woke up this morning and I saw a bunch of really well-known names, in a way kind of communicating this. Like someone said, something along the lines of like these Japanese central bank. I can't believe that, the Bitcoin traders think that the central bank actions had an impact on price, right? the movement in the yen overnight. Okay, so just go fucking pull up a chart, right? Governor Ueda made some kind of unexpected hawkish comments. I miss a lot of this shit because I go to bed at like 9:30 these days, and I wake up early, but this shit happened overnight. Unexpectedly hawkish comments. Okay, so everyone saw what the rate today was above. I think it was above 1 for the first time in who knows how long. Japanese bonds or treasuries, whatever it was. I don't have too much of a handle on this, right? This is not my forte. This is not my area of competence. It's not my lane. Okay, but I could also see that there is a uncanny similarity between when BTC decided to take a shit and when this happened. And more broadly, when other risk assets were hit as well. Okay, so you have that, right? It's one thing, right? It might not necessarily be 100% causal and be the only thing, but I don't think you could say that it didn't have an impact on a sensitive market. I think that's that's like the more salient point, right? That a market that is in a downtrend, that is, it doesn't have a bid, right? It's only recently started to show signs of having a bid, right? The rally has been a little bit more substantial than anything else on the way down. That really anything that's bearish is being used by the market to move it lower. And that's like one of the hallmarks of a bear market. And the transition out of a bear market into at least a neutral market, or a market that regime is changing for the better, is a sign that the bad shit, for lack of better words, right? Sometimes I'm eloquent, sometimes I'm not. More often than not, I'm not. I'm just a Greek-Italian kid from New York. Not a kid anymore, actually, so gotta take that out of my vocabulary. I look pretty good for 40, though, right? One of the characteristics of a market that is showing strength or transitioning is when there's actually bad news, right? The market is disseminating bad news and it's having minimal market impact, okay? So there's this clear imbalance between, at that point, demand and supply. What's the other thing, right? What's the other thing that, let's see, rebalancing, more sellers on roids. So Japan rate hikes, bond yield spike, correct, yeah. So it's one thing, right? We can't say that it didn't have any impact, right? If you put an overlay of the yen, right, JPY USD, throw that at, or USD JPY, right? It's going to be different. Throw that on the BTC chart and throw like the ES on it. Throw the NQ on it as well. Throw gold on it. See if there was a almost immediate algorithmic response or algo-driven response to this. There absolutely was, right? Had conditions been good to receive this, it wouldn't make a difference. It wouldn't make much of a dent, but BTC clearly has more downside capture than equities. We saw that today when equities ended up rebounding into the early session, right? Or excuse me, into the open, and you couldn't find a bid in BTC. So what else? More sellers on roids, rebalancing. All right, I mean, it's the first day of the month. I don't think so. Not at the end of the year. So at least in this market, because of the way this market is trading, right, and in this sense, very path determined, I don't see why anyone is going to be taking a risk or extending themselves in BTC this close to the end of the year, right? It's very likely that most of those people are out of the market. I don't see why they'd be buying into this market, or excuse me, I don't see why there would be further selling into December. You might have had some, initial systematic response to that close, right? The November close, because listen, these closes. So people who say like, oh, why do you care about a daily close or a monthly close or weekly close? Well, because a lot of other people in the market actually do. And if you look at the actual spike in activity at these events, you could see that there is significance to them, right? It's not, it's not the case that we're paying attention to nonsense, right? So once you had the monthly close, maybe there was a flurry of selling activity that came in as a result of that. A lot of time you see that whenever you have a significant shift in market structure. So like a key contextual level's broken, have a huge weekly close through a multi-quarter, multi-year range even, and you'll see that that's a green light, and there's a bunch of activity that'll come in right after that. Rebalancing, basic monthly MACD and sentiment rumors. Oh, so this is an interesting one. So yeah, so here, okay. So things that you don't want to see. So people love the story of the Eggman, right? Is everyone familiar here with the Eggman story? Yes, no? Where'd you guys go? Where's the, here we go. Baby crying in the background. Yeah, sorry about that. This mic does a good job usually of eliminating that. Okay. All right, so you're familiar with the Eggman story, right? It is a good story. It is a good story. So basic story, trader believes the price of eggs is going to go up, right? This is like some market adage or parable, fable, I don't know. But it's about liquidity risk, right? And I'll preface this by saying Saylor, I think he owns 3% of BTC, right? Which is like, as a public figure, not something that really makes me very comfortable, right? I think most people look at it and they're like, especially with how, I don't know, unprofessional the guy can come across as, but he's a madman. He either goes down in history as making the single greatest trade of all time, or I think the sort of diametric opposite. I don't think there's a lot of middle ground here. So the Eggman story is, everyone understands what it is, right? Yeah, okay, well, a couple of you guys do. So basically a guy calls up a broker. He says, I want to buy 10,000 eggs, right? $5, right? Okay, buys 10,000 eggs. All right, broker sells them, sure, cool. Next week, price of eggs at $7.50, right? I want to buy another 10,000 eggs, okay? Same thing the next week, right? Eggs are, $20, right? Guy feels like he's an absolute genius. Buys another batch. I want to buy 50,000 contracts of eggs, whatever eggs are, instead of actual quantity of eggs, 50,000 contracts of eggs. We're trading eggs on the CME. Each egg contract is worth, let's say, a warehouse of eggs, right? You got to think of something that's a bunch of units, right? Like as if it was oil or any other commodity future. So he finally is like, wow, this trade has fucking crushed it, right? He was at 5, whatever. Maybe it trades up to $50. He decides to call the broker, and he says he wants out, right? He's about to retire. And the broker says, sell to who, right? You're the Eggman. He is responsible for driving up the price of the eggs, okay? There's a much better story, a real version of this that we've actually seen. It's a bit different. Obviously, I've referenced it before. If you guys want a phenomenal book to read, read the book Hedgehogs. It's about, if you see, make sure you guys are caught up. Yep, yeah, it is a good story. You think Saylor's going to repeat? Yeah, I don't know. It's debatable, right? There's a really good story that is very similar. And again, read the book Hedgehogs. It's about Brian Hunter and John Arnold, right? And essentially, right, this is around natural gas, which actually looks like a decent trade right now. Natural gas above 475, 480. Some fundamentals, some technicals there that are lining up. But again, relies on a very cold January, cold December, cold January. So back in, I think this was 2006. I don't know if you guys know who John, does everyone know who John Arnold is? Does anyone know who, you would probably just know who John Arnold is. This chat is like, it was giving me issues before. There we go. Okay. Does anyone know who John Arnold is? No. Okay. So, John Arnold versus Brian Hunter. John was an ex. No. Wow. Okay. So, you guys should read Hedgehogs. It's an awesome book. John Arnold was an ex Enron trader, and he was known as the human algorithm. So Brian Hunter, on the other hand, was part of, he was a trader for, no. So sorry, the chat takes a second to catch up. Brian Hunter was a trader for Amaranth Advisors. So basically, long story short, Brian Hunter ended up buying up like 70% of the natural gas futures for what was the Widowmaker trade. So the spread, I think, between November and February, maybe December and January, or December and February, I don't remember. But he bought these well in advance, okay? He bought them for the winter months. So I think he bought them for January to March, okay? He became, like I said, 70% of the market. I don't need to tell you guys how this what ended up happening, right? He ended up blowing up, right? And John Arnold actually was taking the other side of the trade, okay? I think at some point, Brian Hunter actually called up John Arnold to like maybe offload some of this position, and there were no buyers, right? Brian Hunter had essentially done all the lifting on his own. I don't know if this is the same as Saylor's situation right now, right? But there were I think, what was exactly said? Let me pull up what was said. Okay, so the CEO of this is things you don't want to hear for $500. The CEO of Strategy said, we can sell Bitcoin, and we would sell Bitcoin if we need to, right? Which is not the best thing to hear. Now, as long as it trades at a discount, that is kind of what needs to happen, right? You know, they could continue to sell shares and buy BTC when things are good, but when it's trading at a discount, then ultimately, this is what like a lot of the other DATs ended up doing or needed to do as a result of trading at a discount and just not being able to hold one, was sell the asset and buy the stock back, right? Protect the share price. So I think this is like, I don't know enough about this, honestly. Like, I am being a tourist to some degree. I'm not a CFA. I don't spend enough time, digging into this. But I think more important is, like, most people aren't. Most people who I would say hold BTC and are involved in crypto, most of them probably aren't. They're not that privy to the actual details. And what ends up moving markets more than the actual details, because if truth was required to move markets, then markets wouldn't move nearly as much, right? So perception, right? Perception ends up moving markets, okay? Perception, uncertainty, right? The uncertainty to certainty transition, right? What happens when a market goes from being uncertain about an event to certain about an event, right? This is what I think, especially in this market, super reflexive. This is probably more important. So the perception that, they would have to sell, right, BTC to buy back MSTR, unless BTC goes on a tear, right, is probably the most important detail right now. And then today, Strategy announced that what is it? Hold on one second. They announced they established a USD reserve of $1.4 billion to support the payment of dividends on its preferred stock and interest on its outstanding indebtedness. This, so before we get into this, either way, just those last two reasons, like let's say it was the Strategy announcement, let's say it was the yen, the yen trade. The market is down, right? The market is responding to bad news. Objectively, the market is down, okay? So fighting this trend and being surprised that it's moving down for one matchstick strike for the other, I don't think is as relevant. But going into the more recent announcement, this is like starting to look, I mean, what, I didn't read the entire thing. Did anyone read the announcement? It kind of reads like a Ponzi to some degree, right? So funded by using the proceeds from the sale of shares of things don't look that awesome on the strategy front, right? It's clear that the business is losing money, right? And this kind of infinite loop strategy is under stress, right? I think that's as clear as day, right? Normally you could sell stock, pay interest, buy BTC, everyone's happy, right? And now it's like they're hoping that the price of Bitcoin goes back up just to be able to start this loop again, right? This is kind of like this perpetual motion machine. So not too good. All right, let's get into taking a look at the actual market. Anyone have any questions before we talk about BTC? Yeah, I'm just reading this now. This is not my, I should just throw this into an LLM. So first things first, let me get this out of the way. Might take a second for chat to catch up. No questions. So discount on the Trading Stable Workshop. So it's Cyber Monday. So type in Cyber Monday and you're good. The next workshop starts in January, and that's available to any member. So, all right. So first things first, I just want to get this out of the way, and then we will take a look at the charts. I don't think that alts really deserve a whole lot of attention right now. If they did deserve, if there was even like a modicum of hope for them, I think it has been more eroded now that you have stocks available on platforms like Hyperliquid, on platforms like Lighter, right? If you could trade like the Mag 7 and darlings of the stock market, I say darlings like retail favors, Rivian, Lyft, DraftKings, Palantir, AMD, GME, you name it, right? There's a bunch of different sort of retail darlings. If you're going to be able to have access to that on Hyperliquid, on Lighter, whatever, there's a million different exchanges now. Even if, or not even those, like just the Mag 7, you could trade Google, you could trade Nvidia, you could trade Meta, right? Why would you want to trade alts, right? Like the gig is kind of up. Like we know, and this is why maybe Fartcoin is doing somewhat well. Because one, it front ran everything up on the way down, lost saturation before anything else. And it's kind of back to that like nihilism about the space. But why would you want to trade alts, right? Why would you want to buy and hold alts here? You could now trade stocks on chain. And I think a lot of people are involved in this market because of the regulatory arbitrage aspect. They didn't want to, KYC, AML, give your blood to trade on, Schwab or, Interactive Brokers, Fidelity. So now that they have access to these real assets that have balance sheets and true narratives and substance and they're tangible, right? I could look at my iPhone and I know right away that I trust Apple. It's not going to wick to zero overnight, right? So alts have a lot of ground that they need to cover substance-wise to make them reasonable holds, I think, unless there is a return of momentum to the market. And that is, for that, I mean, I don't think you have to be early to that. I don't think that you have to look at alts every single day and go, I wonder if it's going to turn here. You set, my advice to anyone who asks me is, unless you're trading intraday, like you're a day trader, and then you're sorting alts by RVol, right? What's up on the day, what's liquid, filtering for volume. I only want to see things that are above 100 million volume. I want to see things that have ADRs that are above whatever, BTC, right? BTC's average daily range is like 4%. I only want to trade things that are double that, right? I want to trade things that are moving. And this is very isolated to the day, right? Because I think what you could do with trading alts is you could day trade them. People are FOMOing through highs and panicking through lows, and there's a lot of sweeps that take place intraday, and there's like these little scalps that, if you get a liquid pair, you could clean up, right? As long as you don't, you tie yourself to the mast and you don't tell yourself that your long entry is going to turn into a longer swing trade. Most of these you could probably just take completely off your watch list and create filters where you say you're only going to be on my watch list if you're back above the 20 period on the daily, if you're oversold at least once on the daily. Like, this is a decent way to create a watch list. Has it been oversold deeply? Like RSI, for example. Create a filter that only populates based on things that are oversold on the daily, right? So it's a warning shot, because things will bounce big, but they could bounce big from 20% lower, right? If there ever was a marginal buyer, like a small one, now they're trading Google on hyperliquid, right? So create filters and make things earn their way onto your watch list, because until things start trending and then the trend is more obvious, right? You could use some basic moving averages, right? Momentum oscillators, and then you could afford to get into the trend kind of late because it has inertia and it's kind of it's a big ship turning slowly, right? It's not going to trade back in the opposite direction right away, right? So, that's what we're supposed to believe, right? And more often than not, that happens. When changes happen on the high time frames and the market picks a side after that, after ranging for months, it's usually that it has a little bit of legs behind it. Until then, why would you want to trade alts, right? So that leaves us with BTC, and I think there's some good stock trades as well right now. And then gold also, which I think has the technicals right now and the fundamentals again. And we're off the highs, but moving back towards what was a major supply zone. But I still think it's a compelling long from here. I'm going to let you guys ask questions for a second. I'll be right back. I promise I'll be right back. I have to use the John or the men's room or whatever you guys call it. Okay, sorry. Too many club sodas, to be honest. All right. Yes, the discount is only available to first-time subs, of course. It's can't just have people sign up and then a couple weeks later they realize that there's a discount. They want to use it for that. It is limited too, so it'll be going on till 12 a.m. today. All right, so let's get back into it. Any questions before I get into taking a look at BTC? I try to be as objective and non-sensationalist as possible when it comes to altcoins until they are reclaiming some key moving averages, until they're just not trending down only. And alts become really good trades when there is momentum, right? And you don't have to buy the bottom. You don't have to buy the bottom. You could be 30% off the bottom, 40% off the bottom, 50% off the bottom when the ship actually turns. And I think the trouble is when people get that kind of signal and they look at the bottom being so high, right, or so much lower, and they think, I can't buy it now. I can't define a position on this. I missed the low, right? The reality is there are 20%, 50% trades all over the place. There's 5%, 10%, 20%, 50% trades, whatever you want to, whatever window you want to work within. There are definitely places where a 10% window, right, has a much higher EV, or a 20% window has a much higher EV, okay? In this market especially, where levels are actually, they take on a little bit more importance, technicals matter a little bit more, price is value. So just because you missed the 20% off the low, it doesn't really mean a lot, right? I mean, you could capture a 20% move, right? I don't want to talk about this like you take for granted, but in this market, there's a lot of trades every week there's a trade like this where the setup just has a higher EV, right? Can I buy somehow assets without trading it on chain and using a regular broker? I mean, there are definitely platforms now and dexes where you can access these things. All right, so let's get into just taking a look at BTC, and then I'll take some chart requests, and we'll wrap this up in like 20 minutes. I don't want to waste anyone's time. All right, switch it up. Okay, good stuff. Get this out of the way. By the way, quick shill, because obviously I am on Team Breakout, but this is like the one paid prop firm that I think is legit, right? It's clear. I wouldn't attach my name to that, my name to it, if it wasn't the case. I think there is a really important selling point that makes it worthwhile in this market, and it is because of the counterparty risk that exists in this market. So there are many times when you could get blasted by an exchange error, right? Having your money on exchange, get liquidated, right? Being right about the idea, wrong about the execution. In this market, above all other markets, right? Most markets, when it comes to trade, TradFi, you're trading on these prop accounts that are, they're demo accounts. You're forced to trade like the fucking ES or the NQ, which retail shouldn't be trading. And you don't even know if you're going to get paid. There's no payment issues with Breakout. And most importantly, it's crypto. So in a market that has a ton of counterparty risk, you don't have any counterparty risk with Breakout. So this is a soft shill. I have a code, so my code is below. You guys get like a small discount, right? Everything adds up. But I think they're a great option in this market. You can't say there's great arguments on both sides. Why prop firms are bullshit, why they're great. It's in the middle, right? It's never black and white, right? For some people, this can be really useful, right? For some people, yeah, maybe they should just trade their own money. And if they have an edge, like just grow your own money that way, right? But there is something to be said for being undercapitalized. That being said, let's take a look at BTC. I'm pretty strict with BTC now, right? Like I said, like objectively, there is no denying that this is in a downtrend. There's no denying it across every single time frame. The only time frame where we briefly had some respite was last week. It was the first time when we had some kind of value development to the upside. And if you looked at like TPO chart to get a view on that, very basic, right? The entire way down, it's just value, lower, migration lower. This is a composite, right? So it's multiple days compressed into one. I prefer looking at TPO charts many times over looking at candlestick charts, right? I want to see where people are doing business, where the market has left air pockets, right? Thin areas, right? Areas that are very accepted, where value is developed, right? Agreement is, right? Fair value. Areas where there might be imbalances. It's so obvious when you look at a TPO chart. I put a whole article out today that I think it's a really important article for everyone to read, though, on like attaching your identity to tools, right? Because if someone asks me how I trade, I'm like, I'm a multi-strategy, hold on, my camera just turned off. Let me turn that back on. Let's get that back. Let's get that face back. Wait one sec. Where are we? We back? Yeah, if someone asks me how I trade, I am a multi-strategy discretionary trader. I trade differently from one regime to the next. Sometimes I see a short-term opportunity, I hop on it, right? It's a fleeting opportunity, I'm in and out, Sometimes I see something that is lining up that is more of a swing, right? I am far more opportunistic. There's a lot of traders, when they start, they're just like, I want to be a price action trader, right? I learned this system and now I'm just going to do that forever. That's what you see that's very common by retail, because again, they get sold this bill of goods, or they get sold on systems, right? I created a flow and profile course, right, years ago, put it out for free for years. And people it became their religion, right? There's a lot of big accounts that I ended up teaching that are CT accounts, right? That very, very infrequently get any kind of recognition for being literally the person that taught them how to use it. Now they're super popular. All the best for them, but you can't make it your identity, right? It's a fantastic tool, But when people first learn footprint, it's the same thing. It's like they're so focused on stuff that's really just noise, right? I mean, we're trying to get a big view on many times positioning, who is the aggressor, if there's position getting trapped, right? If there's any momentum, whether there's momentum or not, can have a massive impact on a setup, right? Whether it persists or it exhausts. Either way, this trend is, by all accounts, it's down, right? By all accounts, it's down. It is a breakout of market structure. We're below moving averages. We're below VWAPs. I said the same shit last week. So I don't think that, so I think this is an area where it makes sense that a low could form, right? Trapping sellers at the lows again, I think it's completely possible. So if we trade through the lows again, if we trade through 81, 387, I keep looking at the fucking other screen, which is the chat versus the camera. I'm just going to get a teleprompter. This is going to be one day where you're just going to see me the whole time talking like this, and my eyes are going to be moving back and forth. It's entirely possible this is a good location for more patient traders to fill their positions, right? But again, they're probably not like super price sensitive, probably much more patient than your average speculator that's like in and out lately, right? You can see prices just moving like people are a little bit panicked and they have PTSD. So I think until the trend changes, like shorts definitely makes sense to prioritize. Like, I don't think people want to ever hear that in this market, but it makes sense. Like, the trend is your friend, right? The overwhelming force in this market right now is buy sellers. Like, the fact that equities can be bid intraday and BTC just continues to get smashed. There's like brief periods where if a New York session gets smashed, you'll have Asian session float. But other than that, it's like, it's very short-lived. So I think all the signs point to, hey, this could possibly be a longer bottom, but it's probably all the signs also pointing to the more operative part of that is, hey, this might be a longer bottom, right? So I look at this and I'm like, all right, maybe we form a range between maybe high 70s, maybe where we capped out at, maybe 95, right? Slightly above that, maybe 100, right? I think there's room here, but I don't want to be buying until I see clear signs of strength. So for me, it's like, where is value developing? We air pocketed what made this such an obvious area that we were going to break down through. And I said this last week. I said this in the community. I pointed out numerous times. I was like, guys, this 92, 93 level, that was great, right? This was such an obvious trap. If you looked at the actual flow through that level, like if you just looked at a footprint as a new trader, you could have seen it, right? We air pocketed it on the way up, right? So we left this air pocket here. We air pocket on the way down. Very rare that you're going to leave. And by the way, this is more important here. This air pocket, so this gap of singles with this overlapped, there's just multiple areas where there's no value development. It's untested positioning. It doesn't take much to put the market through that point, right? It's an air pocket. It's a, people call it an elevator shaft. There's no development. There's no stickiness. When we say untested, it's because if you think about how people behave during a breakout, if they're buying into the breakout, their invalidation, if it's a soft invalidation, is probably really local, right? So if you accept back into that gap, which is right here, it doesn't take much because there's nothing that really got established on the way up. It doesn't take much to get the market moving fast back to the opposite direction. So I said at the end of last week, 88 is my line in the sand. It was a line in the sand, not a shoreline. And it's for multiple reasons, right? We had, at the time, we had this kind of ascending diagonal that was lining up nicely with that. We had the rolling weekly VWAP, which was lining up nicely with that. And it was the idea that, hey, this market has been known to backfill, right? Trade back into inefficiencies, fill them out. And we want to see that right here. So it makes sense. 88's good. And we didn't. We just smoked right through it. And this is why I do not get involved on the front side in these conditions. Getting involved on the front side meaning step in front of it, long it on the way down. I'd much rather see development, right? So we're back inside of a composite. Just think about it as we're back in an area where the market accepted previously, but it hasn't been accepted higher. So I think 88 is like 88, 85 is a good level for me. I think it probably sets up a really fast trade, which are great when you could take these. I mean, the lower we go, the more important 2,000 points becomes, right? I mean, 2,000 points at 125,000 is a lower percentage than it is at 86,000. So if we have a trade where if we're back above 88 and we're accepting into this air pocket, and this is what the ES and the NQ have been doing for the last couple of weeks, and BTC is doing it too. It's doing it more to the downside. The the odds are that if we accept back within this pocket, we move back to 90 pretty quickly. And then honestly, for me to get bullish again, right, at least in the short term, because I think there's a bunch of great levels that you could get involved, but there's many times where it's just, hey, those are not here. I think if we accept back above, let me close this. If we're back above and we're building structure, about to bust out a drawing tool, I hate doing this. If we're back above 88, we're establishing value up there and we're filling out this region. And by the way, this is an inside weak structure where when you look at the weekly chart, you see how minimal the development was within there. If we're filling this out and we're holding 88, right, we tap 90, there's no major rejection yet, then I think it's easier to be bullish again, right? If the market is suddenly getting accepted higher where it was not accepted previously. I think that would be a great sign. Another very simple concept is like if we're, for example, if we're back above this 20, right? 20 period EMA is often a level that gets acted on systematically, especially when trends flip like this, when it's clearly a trend. In a flat market, the moving averages aren't relevant. But if we're back above, at this point, if we're back above this and you have this kind of W bottom, you're back above that moving average, I think there's a good case to be made for a momentum position from like 90 to 93 to 100, right, even. So it's not that the market can't bounce, it's just not showing, I think, the best evidence right now that sellers are doing anything but letting the book repopulate before slamming it again. And there is just, I think, far too much PTSD in this market where positioning isn't really that sticky, right? It's not that sticky. It's coming off at the first sign of trouble. So I think, again, what I said last week is I think we're probably going through like a time-based correction more than anything. I don't think you're getting a V-shaped reversal. So it's not going to be a price correction. A price-driven correction would be ripping back up, right? Trading back above 100 very fast. Probably isn't happening. So if we're developing value back above 88, I think there's 88, we tag 90, we tag that, we're not immediately offered, meaning, markets being overwhelmed by sellers again, which on Coinbase, if you look at Coinbase right now, I mean, the Coinbase story is basically up only CVDs. So Coinbase CVDs this is Coinbase CVD right here. It looks like Coinbase has been on a buying spree, but the reality is that CVD is misleading. It's actually just, it's more likely that, so over the course of this structure, you could see that price is flat, right? It's making higher highs here. So initially following, and then price is flat, CVD continues up. CVD is continuing up as price drops. So it just looks like there's more limit selling than anything. It doesn't look like there's a crazy amount of buying. So that's relevant, right? So until that's not obvious, right, I think we're in for a little bit of a ride. So 88 and above looks good. There's one setup though that I think if we're able to show continued signs of strength, I didn't want to just say this on Monday because it's the first day of the week, right? And it might have looked better though, or lined up or dovetailed a bit more if stocks continued to have trouble today. I mean, into the close, the ES and the NQ did have some trouble, but the setup would be, so excuse me, getting hot in here now. You have an inside week. So inside week, similar to inside day, we look at this as like two things. The overlap here stands out, right? Market usually doesn't leave that behind, especially when you have two of those back to back. So gaps like that, you could be left behind after breakdowns, but we're within structure. So you have an inside week, this high, this low, inside the prior week. This is more often than not a mean reversion setup. So we swept that 85, we're back above. That coincides with the idea, filling this coincides with the idea of that 88 level being rebid and then trading to 90. So there's a little bit more weight, I think, to that mean reversion setup, right, around the inside week setup. And I think you don't look at the first day as the evidence of that. The same way with like on a daily inside day setup where let's say we have a day inside of a prior day, right? It's completely engulfed. This is more often than not initially a mean reversion setup. If you sweep the low, accept back in, sweep the high, and then accept back in, you look to trade towards the other side. multiple days of this, I call them Russian doll setups. You look for expansion. If you have enough compression over, course of days, you start to look for expansion. So this, I think, it's possible that this setup might play out, but I think it would be like a Tuesday, Wednesday thing. And it's at the pace that it's moving right now, it seems like that's entirely possible. But point being, this market has been, the most important point rather, for this week has been an opening drive right off the open, straight down. So this area of singles in that 88 level, I think does become like the perfect area to get involved. You also have confluence between last week's value area low and that point too. So there's a whole lot of reasons why I think 88 to 90, it might just be like a gimme, right? Like an easy trade to take. And then development back on the other side of that starts to look interesting. And develop on the other side of that, there's a good amount of confluence between that and some other fine details as well. We're back above, for example, we're back above sort of the 1 4-hour trend, right? If you look at the 1 hour, 4 hour charts, throw some moving averages on there. We're back above the rolling weekly VWAP, which has been on the way down. That's been, it's been an indication that the cost bases continue to move lower, right? Buyers and sellers are happy to do business lower. When that flattens out and points up, right, it's a better sign. Pointing down again now, it's ultimately going to move sideways. But if you're back above there, you could start to make a case for, hey, we're back above, a significant amount of participants' cost basis. Okay, and you could throw an anchored VWAP on down here too and see where we are related to that. It's kind of similar to where the anchored VWAP is, right? So the anchored VWAP off of the lows. If you just want to get like an idea of positioning where it's averaged out from the low. But right now, there's a lot to be desired. So for me, 88 and above. First trade might be 88 to 90. If we trade 88 to 90 and we tap and we're back underneath, if we're back underneath, let's say where today's value developed. So currently we're looking at like, we'll say if the market does something like this, let's say we trade up towards, and I hate drawing squigglies, guys, because it's just, I don't know, people cherry pick them when they work out well, and it's just to convey, slight path, right? But don't take it too seriously. Overall direction, right? If we end up trading into this air pocket, and then we're trading back under this POC, right, where bulk of the positioning is, you had a lot of buying down here in the futures market. If we're rejected up there, I think you just aim towards 82. Right, if we reject there. So this 88 level is really important. If you could spend time in there, if we could begin to fill that out again, and if we're back above this high, then I think we have a really good shot. If we're hanging out and we're trading 88, 90, we tagged it, we're not dying there, we're bid, I think you just aim towards, you trade towards 92, but realistically you probably have some overthrow after that. Does this all make sense? No, oh yeah, the Nico, I can just send me a message on Twitter. Yeah, these are double distributions. They are. So they are areas where the market briefly established value and then very quickly repriced somewhere else. It often is that these are called liquidation structures because there's only a few things that move markets that fast. Usually double distributions often also happen during or as a result of news. So there were some decent signs earlier today of selling tapering off. So let me just open something else up. This is a great platform, by the way. No complaints. No complaints. This is a great platform now. What were we looking at? So something that started to stand out, which is what you were ultimately, we talk about this shit in the stable all the time. We talked about it today, right? As why this probably would, one of the reasons why this might be a good mean reversion level, right? There's times when you could spot something that might be a good level where you expect mean reversion, right? You expect some relief, but not necessarily a trade to be put on. So one of the reasons was we did have, so today's move is, it's about 50% greater than the average daily range over the last 20 days. So it's a big day, big range day, not through a level, into a level. So that makes it, I think, easier to fade. So one of the things that I created was just this ADR indicator. It shows you the current 1 day ADR and then what the average is over whatever look back period you want to create. So I use a 20 period look back. So today's Bitcoin range from high to low is just under, 8 points, or excuse me, 8%. And the average over the last 20 periods is 4.5. So typically when we have moves that blow through the average, whether it's 50%, 100%, right, multiples, and it's not a breakout, it's not happening through a new level, it's into a level, I think those are often good fading opportunities. What stood out today, and this is what we look for, right, for a turn, is that what you want to see is like, are sellers interested in selling for every new low? Think about it simply. Are sellers interested in, every time we make a new low, are they interested in selling more, right? We don't want sellers to really be that interested. We either want a lot of selling and no new lows, right? So absorption, or we want new lows, but no one's interested in selling anymore, right? So we have one low, well, they have low, another low, right? Breaking down, another sweep through that low, which you'll often see spikes volume because you'll have a stop run, and then another low. And overall, the transition in deltas across exchanges is up. So up meaning what you're looking at is negative deltas beginning to taper off. So each subsequent low that's made, right, except for this, what looks like a Coinbase stop run, hence that big delta, it kind of looks like we were running into a spot where each low was leading to less selling interest, right? Sellers less interested. And also we weren't able to punish as many positions. So liquidations were tapering off too. So these are two things, or this is something that I look at. They're not two things, it's multiple deltas. But to get an idea of like, hey, it's the same on the way up. Like every time we make a new high, are we still seeing that people are aping the shit out of this? Which if you're just like so into this idea that volume means that, volume comes in and gets trapped, you're going to look at these and constantly be shorting, things that continue to move up. What you want to see in a trend is that buyers are still interested in buying through the highs, right? That's it. They're interested in buying through the highs, and also that last level is now support. So when you see selling come back in, even if it's a lot of selling, even better, the market doesn't budge as much, right? So there's less market impact on the downside. Same thing at the lows. Like as we continue to make new lows, are people still interested in selling this thing? A good sign of a turn on low time frames and high time frames is no. Every time we break the last low, there's less selling that's getting involved. And, there is something to be said for 3-drive structures. And this kind of coincides nicely with, if you have something that's a 3-drive structure and you're looking at the delta of that, right? Each subsequent low or breakthrough a low, because you have to also imagine what you're also showing when you have less selling through the fucking camera turned off again. Let's just leave the camera off. I must have a setting on that tells it to turn off after it's been on too long. When you have every new low broken, but less selling come through, it's not only just, voluntary sellers no longer interested in selling. It's also a sign that you've like hunted the extent of positioning that exists. There's sell orders underneath that are just hard stops, right? And we do often see the market seeks out liquidity, right? I mean, this is something that's like, bleh. People say it like they create like entire narratives around price seeks liquidity, and this fucking bullshit just makes me cringe. It's so stupid. But yeah, I mean, there are participants in the market that if you're close enough to a level that they think is, if the market's close enough to a level they think is exploitable, and they've modeled that maybe there is X amount of positioning that's accumulated around that structure, and they know that on average the market participants in this market use X amount of leverage, and as a result there's a kind of there's like a, what would you say, like what's that word for, like they could poach the market, right? Maybe they give it a little shove, they spend a little money to send the market much further, right? So there is momentum ignition and there is this kind of hunting behavior. But I think people often they personify the market too much, right? As if it's, there's like this Sauron, that is like seeking out everyone's stops, which is not the case. No, you can't look at legacy futures on that platform. So is my bias clear on BTC right now? Like, let's retake some moving averages. Let's not fight over the scraps intraday. Let's get back above, like, let's get back above some VWAPs, right? These are for context, by the way. People use VWAPs, I think, really systematically. They become it's like another one of those popular things recently, but it's for context. I mean, this is what it is. It's like, where's the positioning on average has it been placed, right? From, let's say, a look back period of 1 week, a quarter, a month, right? That's what it is. It's not like this. I think there's way too much focus on cool looking tools in this market. Anyhow, no, you can't look at, like I said, you can't look at legacy products yet in that market. A couple things, like I mentioned this, Fartcoin. So I was long Fartcoin last week and ended up stopping myself out. Fartcoin is the one thing. So I created this tool. It's just a regime filter. There's a lot that goes into it. I'm not going to spoil it, right? I'm going to give it to members during the January workshop. Fartcoin is the one thing that is beginning to, it's showing signs of health more than anything else. It's not even health. It's like when this market turns, momentum arrives to it because there is a very self-fulfilling sort of price is value nature here. And we're back above moving averages. You know, we rebid prior areas of market structure on the way down, which nothing has been able to do really. Nothing that's worth trading. Like, there's shit that's popping left and right, but it's like 10 million volume, right? Fartcoin is starting, it looks decent, right? It looks decent. I think the best thing about it is that, honestly, and this level up here is where I think a reasonable target would be. If we're able to maintain this, I'll probably end up getting long again, is that Fartcoin front ran everything on the way up. Peak Fartcoin euphoria for the longest time, got saturated, and then rolled off before everything else, right? Because this was just, people subscribed to this like it was the next Dogecoin immediately. And this market can get crowded real fast, right? So it went through a bear market before everything else. And it's in a sector category that benefits from belief in nothingness. And after every subsequent breakdown this market goes through, there's more of that belief that nothing matters, right? So I think that trade has potential. It is contingent on us at this point holding this higher low. Like, this for me would be make or break. But I think there's something to be said for this trading back up to this air pocket, right? So decent there. Natural gas, I shared this trade earlier this morning. I think I touched on this earlier in the chat. What I will say about, I'll say this about natural gas because I think this is probably something that is not like it's not something retail should trade. At least like the, let's see, notions on Aster. At least on like full size NG contracts, front month right now is just like, right? Market's trading backwardated because front month is just absolutely lifted, which means that if we have like a warm winter or there's a little bit of a supply issue, that completely it just takes a shit. And trading natural gas, if it's not like the January to March that's called the Widowmaker, right? Where that is called the Widowmaker, that spread, trading natural gas is a Widowmaker. Right? This thing absolutely moves, okay? So if you're going to trade natural gas, I would say, one, don't trade the full size contracts. You know, you have let's say you have an FCM, you trade through AMP futures or whatever. Don't trade the full contracts. Trade like QG or MNG. So you have a micro and then you have a mini nat gas. I think the mini is a quarter of a contract and the micro is a tenth of a contract, right? So this makes it, I think, safer in that regard, right? You could actually split your positioning up rather than taking the full leap into the full contract with a ton of leverage. Or someone was asking me this morning that you can trade. Well, you have things like Boyle, right, which is a natural gas ETF, and then you have proxy trades, right, that are related to the business of natural gas. I think you only trade those, right, so in the context of a breakout, right? So this is so far, right, it looks like a really healthy move. So for me, that 475, 480 level is important. So this looks healthy. The last time that I shared a natural gas trade in the stable was in June, and that turned out to be a banger. And that's it. I haven't shared a nat gas trade since then. I forgot who brought this up on the radar. I looked at it, right? Took a look at the underlying fundamentals of the trade, whether there was anything there or just looked technical, because you want those things to connect. And I think it's worth position. But if you're going to trade it and you have the choice between, let's say, an ETF or something that's a proxy around just the business of natural gas, right? A relatable, I don't think you take position for a breakout in something other than maybe the ETF, right? You wouldn't trade like the like a natural gas related company for a breakout. You trade something that's pure. It's more related to the actual underlying. What else? Let's see. Aster. Hype. Should have held on to this short. It was a good short, so I ended up closing it out in profit, but took into consideration way too much outside of the actual way the market was trading. So unfortunate. Shared the Zcash short idea last week in the community. This was something that I didn't act on, but the idea was after breaking down like this, if you consolidate at the lows, this thing's going to nuke. So the last short that I gave, maybe was during a stream, was the retest of this level. So we've been bearish on Zcash, right? I don't buy into the Zcash hype right now. What else? Aster. And then I'm going to wrap it up, guys. Take some more questions, but Aster, yeah, it looks like shit. I won't get involved in alts unless there's something majorly, like some crazy idiosyncratic bull case, or they're starting to retake levels of market structure and trend. And objectively, I just can't get involved in this. The next level that I could get involved might be a sweep of this low, but that is like the panic trade, right? Where you're hoping that people panic dump there if they're long here. You also have people that know that that's pretty actionable spot for like a 15 to 20% move. But other than that, like this is by all means, it's a more broken chart than anything else. Not anything else like every other pair, but there's no reason to look at this and say, hey, this looks like a great long. Not yet. I think what I would do with alts is I would have your filter open and say, hey, what is, let's see, let's just throw something up right now. All right, so above 100 million technicals, I only want to see things that are, really deeply oversold, right? So RSI, 20 and below, right? Ronin, right? So this is one of the only things that is deeply oversold. You can change this a little bit, make this maybe 25 and below, right? The list repopulates a little bit more. Okay, so I don't want to look at any alts unless they're deeply oversold at least once, right? Because that's usually a warning shot. It's the time to start paying attention. Or, we could throw on like a momentum screener. So this is a breadth screener, so this is without crossovers, but this will pull up our relationship relative to moving averages. So whether we're above them, right? So price is, in this case, the EMA is below price. So here's a couple pairs that satisfy that, right? Not bad, but they're above it. They don't have crossovers. So the trend, while the market is above those averages, right, which can happen chopping in a range, those are not necessarily crossed over. So what I would want to see is, all right, so maybe we'll have the 20 one day above, we'll say above, and then the 50. And then we'll isolate this even more. All right, so now we have a list of 27 pairs out of Binance's 500, right? And then we'll filter these based on, hey, what has the highest ADR? Okay. What has a decent amount of volume? Merlin, right? What is up on relative volume? Merlin, 1.4. MyX, whatever the hell this is, but you might arrive to something that looks decent technically. I would not even fuck around with this right now because there's so many things on this that I just think are their moves are aberrations, right? They're not legitimate. My only focus on crypto right now would be, hey, what is starting to do this that is in the crypto mag 10, right? What are the dinos doing? Are they starting to turn? Is BTC at a minimum starting to turn? Otherwise, I mean, there's a million other things you could trade right now in markets. Retail darlings, for example, today. As I said, I shared the DraftKings long over a month ago. Retail darlings tend to be day trader favorites. They tend to trade pretty technically. So the long was based off of this sweep. But you have DraftKings up today, you have Hood up today, you have Lyft. I mean, some of these charts, they look decent, right? So Lyft, and then you have Rivian. Similar story. You know, Lyft, for example, this is above a multi-year high, right? Holding trend, looks decent. You know, if the S&P is going to trade towards 7,000 and we get some of the boogeymen out into the end of the year, I mean, it's much easier to bet on stocks now than it is on crypto. So, I don't know, guys. Any other questions? I think that might be it. I've been going for almost an hour and 20 minutes. Netflix. So the thing that I find interesting is it's not working out for me right now. So this is Netflix on the weekly. Lost key moving averages. Is it on the daily? I mean, I for stocks, I really love moving averages. I really love moving averages for long positional swing trades. Intraday trading in stocks, completely different story. What's up? What's liquid? What's moving on news? What is gapping up? What's gapping down? Right? There's any substance to the catalyst as to why that's happening. Is it a gap through fresh prices? Is it a gap within a prior range? There's plenty of trades that you could take intraday. You could take trades around earnings, short volatility trades, right? There's a lot of different setups in stocks, but for longer positional trades, I'm a moving average guy. I think the thing that's kind of has me a little bit back and forth is NVIDIA, because I gave the argument last week about why NVIDIA, it has to be a long if you don't think everything is going to just crater from this point on. This is like the linchpin of AI, of the whole AI narrative, right? So if you're not bullish on NVIDIA here when it was 20% off the highs, then I think you kind of have to be in cash. It's weird. If NVIDIA starts really taking a shit, and it is, by the way, I think it's at this point, hold on one sec, S&P market cap, I think it's like 7.5%. 7.1%. So this is the largest component of the S&P. If this is really turning for the worst, right? I mean, Google did a bunch of lifting, so that's a great thing about the S&P, right? This whole area can shuffle, right? I mean, the top 10 companies are an enormous part of the S&P. I forgot what the actual weighting is, but maybe 30%, or no, we could do a quick math here. Let's say 14, 20, 24, 27, right? It's over 30%. I think this pause, you have to hope that this is just a pause, right? This is at this point trading back to its 120-day moving average, right? Market structure hasn't necessarily broken, but the thing that I forgot to mention this, I use a 20 EMA and then SMAs for everything greater than 20. The finer detail about this is NVIDIA actually had good earnings, and it had this Icarus print. So you had a really big breakout attempt at new highs, and then you had the fucking signal, and the camera went again. I'm just gonna turn it off. I gotta figure that out. You had a significant move through highs, and then you had earnings that came in good, and market is still just moving lower. So it's clear that the market is overweight NVIDIA for the longest time. I say that's clear. But it would be troubling if NVIDIA started to continue marking down. So this sign of strength today is decent. Now, mind you, it is down in the overnight session barely, but this is a good response today. Yeah. But anyhow, I think I'm going to wrap it up, guys. Here's the some of the other in this basket. Just other retail darlings. So you have Mag 7, some of them up here, and then retail darlings like AMC, AMD, right? This was hot for a long time. Oracle is, I don't remember when Oracle earnings are, but not looking so hot. This was a good technical setup that just completely took a shit. And actually, Oracle was one of the White House picks, which is interesting. Yeah, do they? Let's see. Let's take a look at sectors overnight, and then we'll wrap it up. Healthcare. Ooh. Do they look strong? I don't know. Anyway, guys, I'm going to wrap it up. It's an hour and 22 minutes into this. I appreciate all you guys showing up. And yeah, make sure to check out the links below. Femex is also sponsoring this. So there's another bonus giveaway, and I have to figure out what that is before I announce it. Offering to my followers. And make sure to check out Breakout. I mean, Main, Cred, the guys over at Breakout are a phenomenal group, and they're with Kraken. So, I mean, what more can you say? Kraken is like one of the most legit companies in crypto.